Your life journey doesn't stand still, and neither should your wealth. Welcome to Wealth on the Move, the podcast. Hello, and welcome back to another episode of Wealth on the Move podcast. With me, your host, Will Hoffman.
And me, your co-host, Brynn Tarbuck.
Brynn, how was Thanksgiving?
Thanksgiving, it went by quick. Can't believe it is. We got our tree up here behind us. We are in the Christmas mood. And yours?
Yes, it was good. Great time with friends and family, and
kids
now
ready
we're
for
in
Christmas?
the throes of the holiday.
Yeah. Getting the letters, Christmas letters written and all those things.
Yes. And
Good.
as the holiday comes, so does the end of 2024. So that's what we're here to talk about today, is some year-end financial planning things for you to do, because we know that the second that ball drops in Times Square, the new tax year starts. A lot of deadlines are passed. There's a lot of things that you can't do. So we're going to go over just briefly some quick things to think about as we near the year end. We're going to have a great guide attached to the show, Brynn, right?
Yes. So in the show notes, you'll be able to find, it'll probably be a PDF format. And it's actually in a checklist format. So you can also follow along and kind of print it out and follow with yourself and see what you might be missing. Because the year end, it creeps up on us, and there might be more that we need to check in on than we think.
Yeah. And if you're watching on YouTube, you can see a quick guide here that we have. That's our year end checklist for you to print, take to your CPA, sit down and have a quick conversation as you prepare for the holidays. We know that it's a very busy time for a lot of folks. So we want to make sure we get this information to you and that you're thinking about it. But just some things to go over. First thing is, it's always a good idea to schedule a discussion with your CPA. The reason I say that is, as soon as that ball drops, like I mentioned, the tax year ends. There's a lot of things that can't go back and be redone or rehashed before the year end. So if there's any specific nuances in your tax situation that you want to revisit, it's always a great time to schedule a call or a meeting with your CPA and go in and talk with them.
Because those things don't wait for us to sit down and talk with the CPA.
Right.
Like you said, once that ball drops, time's kind of up.
That's it. And it's, we are a big proponent of lifetime tax planning, and that's going to be a very big topic for us to get into after the new year. But if there is some year-end tax sensitivities that you want to make sure you address with your CPA, it's always a great time to just call, maybe review your income and things. And that's kind of the first thing on our list, are our taxes and things to review, because it's so sensitive to December 31st at midnight. So you want to take a look at your income for this year, maybe even project your income for next year. I know, as a financial planner and working on those things with our clients, it's always great to be able to estimate what your income looks like. We like to know what you're earning, what you have earned. Helps us make much better recommendations, so that we just are keeping your tax situation in mind as we progress. Some other things, if you are taking income from any investments, whether it's a retirement account or a regular vanilla individually held investment account, and you're taking dividends and things, understanding what that dividend income and investment income is important. That way you can have that educated conversation with your accountant. Some other things that we kind of encourage our clients to go over, we try to go over with them, is any unrealized gains or losses that you may have in your accounts. Just so if you want to take advantage of them or wait to do anything when it comes to those until 2025, you have that information in front of you. Some other things are collecting any cost basis that you have on sold securities. Brynn, before your time, cost basis was up to the individual, not up to the advisor or the firm. Now, I know since, I believe it was 2012, that law changed, and advisory firms and broker-dealers had to start maintaining that information for our clients. So I know we do a really good job of maintaining that cost basis, but before that, it was up to the investor, and you would get confirmation notices and in the mail or via email. So making sure you have that cost basis is important. We do our very best to gather the information prior to that time for our clients, but it's good to understand that way. If you sold something and there is a gain or a loss, you have that information heading into tax time in 2025. Those are 2 bits of information that I know will make your CPA's life a lot easier. I know that will make your decision-making a lot easier as we progress through tax time next year. When it comes to your retirement accounts, it's a great time to think about if you've maxed out your 401k contributions, if that's something that you like to do. We're going to talk about milestones here in a second, but if you hit 50, you are able to do catch-up contributions. So making sure that you took advantage of that during the year is important.
And we have some great videos on our YouTube channel as well that talk about 401ks and things like that as well.
Yep.
So if you want to reference over there just to watch one of those and make sure there's some awesome strategies and things as well there too.
Yes. Yeah, and making sure you're having those conversations. Any Roth IRA conversion scenarios, we're kind of coming up on the time when you're going to have a great idea on your income. You're going to have a good idea on what tax bracket you're going to fall into. And if considering a Roth conversion from a traditional IRA to a Roth IRA is something that interests you or that you are eligible for right now, is a great time to analyze that, because we have almost as much information as we're going to have on your income to make some of those decisions on. And again, we're going to talk a lot about Roth conversions after the new year, strategies that go along, why they may be a good idea, things to think about as you're doing them. So right now, though, is a great time to analyze your income and see if that's something that is an alternative or an option for you. When it comes to your investments, it's a great time to just really revisit your goals and strategies when it comes to your portfolios. Given the market performance in 2024, making sure that if there's any rebalancing necessary, now is a good opportunity. Really, there's never a bad opportunity to revisit these strategies.
Right.
So when it comes to investments, just because the calendar flips to 2025 doesn't mean the market all of a sudden changes. I know we're going to have our annual outlook. We have a big client event for our annual outlook in January. We're going to do some videos on just what research tells us about what's coming up for 2025. But just because the calendar changes doesn't mean the market's mood swings. We know that's all supply and demand and market driven. So, but there's really never a bad time to be analyzing those.
Right. And then also just because, a year, you look at it, it could be a long time or a short time, but your goals could have very well changed in that year. And so revisiting those as well is very important.
Yeah, that's a great great insight there, Brynn, that if your goals have changed, really, as soon as those goals change, it's a great idea. But, as we reflect on 2024, if there's been a big change, review any dividend distributions that you may have had, from any company-owned stock, anything that you own individually, any mutual fund distributions, whether it's dividends or capital gains, and reviewing your employee stock options. Again, there's never really a bad time for these, but the year end may add some more insight.
Yeah.
Also a good idea to review your insurance, whether it's auto, property and casualty insurance, health insurance, life insurance. Again, those last two, it's always a good time to analyze. I know that, listen, inflation has driven the cost of everything higher.
Yeah.
And insurance has really been one of those things that has been most talked about. Growing up, watching my father run an insurance agency for 50 years, I understand enough to be dangerous about insurance. It hasn't ever been my bailiwick. It's always a good time to analyze that. In addition to that, and this is something that I remember watching him do or talk to his clients about, when you're shopping for Christmas presents, when those high ticket type items end up on the Santa list, and fellas, I'm talking to you, because we know those rings and those watches and those bracelets and necklaces and jewelry are always on the ask list. Make sure you add those things to your insurance policies. It would be very devastating to buy something and have it lost or broken before you get that added to your insurance. It's always a good thing to, if you buy it, keep the receipts, have an appraisal, talk to your insurance company about adding those. If you're buying other things, boats, jet skis, second homes, RVs, trailers, golf carts, whatever it is you're buying and thinking about gifting or buying for someone at the holidays, making sure they get added to your insurance is very, very important. Also, if you've had just, again, like Brynn mentioned, any material changes, make sure that you're discussing that with your insurance agent. Those things have changed. I know that they're much more expensive, and folks may be looking to cut costs. So we're looking at that everywhere we turn right now is for cost-cutting measures. But your insurance is something that you want to make sure your coverage is correct first, not that
Yes.
it's just the cheapest. And I know it's easy to just say, well, let's drop all this coverage to save me some money. But making sure your insurance coverage is done right. Again, watching my father do that business for 50 years and going, he's always been adamant about making sure that the coverage is right first. And then let's look at what it costs and how we can maneuver that a bit. But making sure that your coverage is correct. Yes, Brynn.
Also having that coverage first, because you want to be covered before the incident happens.
Sure.
You don't want to lose that bracelet or necklace or have that boat get water in it or something, afterwards, and then you have to call an insurance agency and then get that. That's going to be just a mess. So making sure because especially if you're getting it as a gift, it can be easy to, got a new car, let's just go drive it around.
Right.
You might want to make sure you're insured first.
We got some snow here in the Pittsburgh area this morning.
Yes.
New car on Christmas is hard to not get behind the wheel of, and if there's some snow on the ground, a teenager may be a little overzealous. So you want to make sure that your insurance agent is looped into that conversation. Excitement over a diamond ring, and all of a sudden the diamond falls out. You want to make sure that you're having those conversations with your agent. It's often lost, but you want to make sure you make those calls.
Yes.
Did you go through any milestones this year? That's kind of the fifth topic to look at. I mentioned if you turn 50, you can start making catch-up contributions to 401ks and IRAs and other retirement plans. At 59 and a half, we know the premature distribution penalty is gone from IRAs. 73 is a big one. You have to start taking your required minimum distributions. If you're listening to this now, the clock is ticking. That 73 and older, you need to do that by December 31st. If it's your first year, you do get a bit of grace from the IRS to April of next year. However, that means you would have to take 2 RMDs in 2025. That could really mess with your tax bracket. So you have a few days, reach out to your advisors, reach out to your custodians, get those RMDs done and on their way to you. Maybe they'll help you go buy that big ticket item that you were looking for, that you got to make sure you call your insurance agent about. I love how this all ties together.
Just all comes together, full circle moment.
Sort of along the lines with insurance, any health insurance changes, if you need to make any health savings account contributions, it's always a good time to look at that before the year changes and you miss making a contribution or maxing out those plans. And then the seventh thing, and what I like about this list is it gives you some good memory joggers that January of 24 is far away.
Yeah.
And we may have forgotten that we've done some things.
There's a lot that's happened since then.
Yes. So, did you get married? Did you change jobs? Did you refinance a house? Did you move or buy a new house? A lot of things that require some visiting before the end of the year. One thing to highlight, and I know it's tough in the holidays because this may be your first holiday after losing a loved one, but we've published a lot of content and we talk a lot about something called the widow penalty.
Yeah. Yes.
And your tax status changing the year after losing a spouse. So I know the holidays may be a challenge going through that, but it's a good time to revisit if there's going to be a big tax change and if there's anything that should be done in this next month, really less than a month now, that, again, reaching out to your CPA and having those conversations. But unfortunately, the IRS isn't very sympathetic when that calendar changes. So making sure that you're thinking about those things, having those conversations with your CPA. If you are the child of someone who lost a spouse, maybe eliciting those conversations through this time, just to make sure that it's one thing to be sad and it's just don't be sad and making larger than necessary contributions to the IRS. And then it's a time to think about that and talk about those. Someone in our assisted living, if that happened, reviewing all that information, if there was a surveillance, or did you receive a gift or an inheritance? All of these things need to really be thought about before the calendar changes, just to make sure any planning is done. And the last thing is really anything when it comes to your family. Education planning. Did you max out those Coverdales or 529s or transfers to education planning? Any gifts to family members? Any charitable contributions that you made? All of those things are important. It's a great time, if we're sitting around with family, to talk. And as a child of two, still pretty healthy 73-year-olds, having the conversation about, what they want the last, 20 or 30 years of their life to look like from a financial standpoint. I say that also as the oldest child of those two 73-year-olds. We know that responsibility kind of falls on us a bit. So just having the conversation of, what do you want those last years to look like financially? Is there anything that we need to know from a health, from a budget, having those conversations? We're going to have some folks on next year to talk about that transition process and stepping in there. But we want to make sure that we're having those conversations. We'll link a show in the show notes. I was a guest on a good friend of mine, Lizette Colette's podcast. Talking about, she's what's called a dementia caregiver coach, and just the financial part of that. And she tells us, just like we tell you about every other type of financial topic, the sooner you plan for these things, the better those processes go. So it's a good time to maybe have those conversations. I know they're tough. I know they're not fun. I know they're things that we don't want to think about, but going through those times is going to be hard enough. Making sure these things are tackled and out of the way are just going to make it that much easier. So it is time to have those conversations.
Yeah. And Lizette, she's great. That was an awesome episode.
I can't wait to get her on ours. She's just a great conversation. Just in the pre-show conversation with her, I was able to take some things immediately to my brother and sister for my folks and say, listen, this is stuff that's easy to do, especially with my brother not being in the area, just having that plan in place of things he can help with, that my sister and I can kind of move over to him, is important to go over. And we don't want to talk about any stuff. We were celebrating my parents' 50th wedding anniversary. So it's just nice to move through that.
Yeah. Awesome. Great. Well, I do have a question for you. On the other hand of things, recent college graduate, first year of working full time.
Yes. You're doing a great job, by the way.
Well, thank you. Greatly enjoy it. Love being here. How does my checklist look different, or how would someone maybe in my shoes, what are maybe like the key things we should be doing that before that first year ends being full time?
Yeah. Well, and it's hard to imagine because of how expensive college has been.
Yeah.
But if there's any life left in your 529 plans, if there's any money left, considering your options there, because there has been some changes with 529 plans, and any money left can be transitioned into a Roth IRA for the beneficiary. So taking a look at that. One thing for parents of graduates, and Brynn, I know you and I went to the same school, and the University of Pittsburgh really does, with the timing of our graduation, I think it really hurts our parents because they can't use us as a dependent this year because we graduate a little bit earlier to give us a jump on jobs, but making sure your parents realize you're not going to be a dependent this year. Again, it's a good conversation for your CPA to have and understanding how that looks. Did you make all your health savings account contributions, and what do your benefits look like? If you're on your own benefits, if you're still on your folks, I know that there's been some changes with the Affordable Care Act a while ago that has made some of those changes a little less stressful and a little less volatile for graduates. Making sure you understand everything about your employer-sponsored plan, retirement plan. If you've ascended quickly to a position that gets you stock options or RSUs, understanding those benefits is very, very important. Remember, if you receive the signing bonus, what that tax situation is going to look like. Again, if you graduated in the spring or the beginning of the year, that was a while ago. So making sure you remember, how that first package went is important to remember as you go through this. And if you haven't done it yet, as a young college grad, get started on a financial plan. I know that first year is again volatile. There's actually a book written a while. I remember reading it when I was your age. I can't believe I'm saying things like that. But I think it was called The Quarter Life Crisis. Just how volatile that
wow.
early to mid 20s is for folks. So, understanding all of that stuff, it's important.
Yeah.
And really for anybody, no matter the stage, having a conversation with a financial advisor, doing some lifetime advanced financial planning is important. Staying organized, that seems to be the first relief that we give folks, is the organization, making sure their accounts are clean, making sure that they're in one place. That just seems to be the, again, like I said, the first sign of relief that they have is this information's intimidating.
Absolutely.
And mistakes can be expensive.
If you're organized, you're almost automatically a few steps ahead.
Yes.
So,
yes.
So it sounds to me like no matter what stage of life you're in, the end of the year, there's at least a few things to be looking over, doing,
have the conversation,
talking with your,
sit in front of the tree, talk to your spouse, your loved ones about what's happening.
Right.
And get ready to ring in the new year and really look forward to better years ahead. What are you looking forward to for the new year?
The new year, man. I don't know. Just I guess I don't know. 2024, I'm ready for a new year.
Yeah.
I'm ready for a new year. That'll be my first full year working, not being a student. So that'll be different. Although it's like you said, it feels like it's already been a while. I guess January.
Just be careful, because all of a sudden you're going to be saying things like, when I was your age.
I know. Yeah, I know. Right. But I guess January, I'll be celebrating 1 year technically being here. So it'll be good. Good things happening. Yeah. We'll start it out with a bang. Yeah.
I'm excited for 25. I like New Year's Eve. I know a lot of folks think it's kind of an overrated evening. I do. I like looking forward. I like growth. I like development. To me, New Year's is always a fun night. Stay safe if you're hitting the road, please.
Yes. Yes.
But I enjoy it. With 3 kids, though, I really don't.
Do you see the ball drop?
No. It's been a few years since I've made it to midnight.
Go to bed and say the joke to everyone. I'll see you next year. That's what my house always does. Go to bed at 9:00. I'll see you next year.
Yep.
That works.
It's been a few years since we always spend the afternoon with some friends, have a nice dinner. And although I have a sneaking suspicion that the boys are going to want to start staying up, and
they're getting to that age.
Yeah, Jamie and I are going to see who draws the short straw and stays up with them.
On and off. Last year was your year. This one's mine, right?
Yeah. Yes, but I'm sure that's coming soon.
8 checklists, and if anyone needs anything, I'm sure, as always, you're more than welcome. They know where to reach out. We are
check
both
out
on LinkedIn.
The show notes will have the link to this on our website. It's a great reference point for you to download and have with you. And as always, if you have any questions, hoffmanwealth.com is our website. It's very easy to schedule a call there. Do we put the call link in the notes also? If you do have a quick question or want to reach out,
we can.
You can schedule a call or just
it'll
buzz
be
us
in there this time. Yep.
At the office, find me on LinkedIn. Just Will Hoffman AIF.
Yes.
But please enjoy the holidays. Enjoy New Year's. Drive safe. And here's to a healthy and prosperous 2025.
Yes. Thanks for listening, guys. Keep your wealth moving, and we'll talk to you soon.
The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Hoffman Wealth Management. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service providers with any questions you may have regarding your investment planning.